Pension reality check. Are you actually on track? Let me give you a quick review. First of all, the ideal candidate for a reality check is going to be somebody probably in their 40s, 50s, maybe even their 60s. And the reason for that is if you're in your 30s, whilst it's important to get on track soon, you've got more room for error. If you're in your 40s, 50s, 60s, you're in the critical zone and you better not be unsatisfied with your existing provider. So let's look at what a sick pension looks like. First of all, you'll have had stagnant growth, returns which have typically averaged about 5% per annum. That's how we'll diagnose whether or not you're sick with your pension or indeed sick of your pension. Then there's the apathy and the anger. You're dissatisfied with the level of growth, but you feel stuck or unsure what to do. The third problem will be the black box, a complete lack of transparency regarding why performance is poor. You're given a lot of excuses. You don't quite understand why you're feeling this way, but you know there must be a better way. You see the result of poor performance, but not actually the cause. Nobody's ever explained that to you. And then, of course, the goal is to transform you from unhappy to informed by analyzing your performance against other benchmarks. So let's first of all start off with the diagnosis, the gene pool problem. Your traditional fund approach is postcode investing. They invest in small segments. It might be AI fund, it might be a UK fund or a Vietnamese fund or emerging markets. And the problem is they've got a small gene pool to invest from, whereas the private investor, of course, has a huge advantage over that should they choose to use that advantage through a SIP or 401k, which is they could actually pick from companies anywhere in the world, which begs the question, how do they do that? Let's come to that in a second. The second problem of the traditional fund management way of doing things is the dilution trap. Good stocks can't save bad funds. Why? Well, let's take legal and general funds. You'll have a typical fund where they'll give you the illusion that they've got ownership of a star performer, like an NVIDIA, for instance, to give an example. The reality is the allocation is so small relative to the hundreds of poor performing positions that they have in that fund, that growth is diluted. So the outcome is even when they pick a winner, the dead weight of the fund depletes your overall returns. Then there's the layered fee structure. Case study in hand is St. James's Place. The visible cost to you is what you see on the brochure. The hidden cost are the fact that the fund invests in their other funds, which charge their own layer of fees. And of course, if they're churning the investments, then there's brokerage fees, commission fees, settlement fees, all sorts of other internal fees as well, let alone advisory fees, platform fees, whatever sorts of fees and charges and levies and liabilities that these firms add on to that. Returns are eroded from multiple angles before they ever reach your account. This layering is a primary driver of underperformance against benchmarks. So here's a stress test you can give any fund manager or any IFA. Did their fund survive 2022? Because when the markets fell in 2022, that's surely why you are hiring the manager, to protect your capital, use their skill, their talent, their resources that they always talk about to deliver you something useful at that period in time. But if instead you found that your fund plummeted in 2022 or your pension did, then it's failed its primary job. Because the manager's role is actually to give a dampening effect, diversification, which they always talk about. If they fail to protect you during the downturn and fail to grow significantly during the upturn, the fund is simply not fit for purpose. Many funds held losing positions all the way down because legally they can't just go into cash, for instance, in a falling stock market when there's no decent stocks to be held at all. And no IFAs are going to tell you you should sell everything that you own because they won't get fees for you just holding cash. So what if you could learn for free how to do some of this yourself? And it was as simple as I've just explained. What if we gave a deep dive completely for free of your current holdings and gave you hard data? No sales pitch, just completely for free. As part of our campaign for 1 million to teach 1 million people how to be better investors. And one of the key reasons for doing this and how our review works is we collect whichever fund you're invested in. You can just give us a name. We don't need to know how much money's in it, but you can give us a name or all the funds you're in and a percentage of how much is in each of those. We'll then do the analysis. We'll pull down the data from those fund managers, their PDFs, historic performance, what they own, what those funds own at the deeper level. We'll diagnose that and we'll explain to you where you haven't got returns. If you're doing well, we'll tell you, oh, it's done well. This is the current problem. And here's the analysis. So you've got something very simple. In fact, what we analyze is this. We'll look at the annualized performance. We'll look at downside protection. How did you do in 2022? So we'll do all this for you completely for free. Go to campaignforamillion.com, by the way. And for those who don't know, I'm Alpesh Patel, a hedge fund manager. I've written 18 books published by the Financial Times. And many of those are international bestsellers. And I'm a former columnist for the Financial Times and presenter for Bloomberg Television and co-host on CNBC as well as BBC newspaper reviewer. We'll then work out your asset allocations and, as I say, tell you exactly where you've been going wrong. So that begs the question, why are you doing this? Is this a sales call? No, it's part of our campaign to teach 1 million people how to invest better. We even have free courses. This book of mine, which you can buy if you wish for 25 odd pounds, or we'll give you a free PDF as well, published by Palgrave Macmillan, not self-published as well, to give you proof that genuinely we are doing it for free. Okay, we don't have an interest in selling retail products. We don't have a retail fund. We don't have retail brokerage. We do not manage retail client money. We manage institutional money. By institution, I mean family offices and pension funds. So we don't do retail funds for the very simple reason retail people have very little money. So our fees would be negligible anyway. Is this part of our corporate social responsibility? Yes. In the same way I go back to my alma mater university and give free lectures. Well, this is going back to my roots of retail investing and giving free information. There's a free course, as I said, which is updated regularly. There's a free Telegram channel, which is updated daily. So if you want proof, oh, is this just for the talk or the gram? No, or the tube. This has actually been going on for a while. We've been giving all this free data. Our business model lies in institutional focus. That's where we actually make our money, the pension funds, the family offices for whom we manage capital. Everybody else, the information's free. In any event, they couldn't pay our fees, so it just makes sense to give it away for free. The goal, teach 1 million people how to add an extra million across their lifetimes to their pensions. It's sort of an arbitrage foundation. A typical foundation gives money to good causes, but then the money in the foundation depletes. If you give knowledge, then you're compounding people's pensions and they're growing and you're growing through that knowledge you're giving. The motivation, very much legacy and relevance. Being an authority in this field, it keeps me relevant because people don't watch conventional TV. They don't read conventional books. What do? They communicate like this. So if I'm going to stay relevant in the final third of my life, this is to be the way to do it. YouTube and TikTok. The ultimate goal is to get you to do it yourself. So you learn how to invest. We don't manage your capital. We give you the data, give you the education so you can do it yourself. You might just pick up the book and do it. Most people don't just pick up a book and do it. They like to see videos on how to do it. And the way in which we teach you is we want you to have the sweet spot of undervalued companies with high growth potential and good dividend yields. Like I said, in case you don't know who I am, Financial Times columnist, several of my books, Mind of a Trader, Investing Unplugged, and the like. So if you want to get that reality check and check your pension, you can do it in several ways. If you don't want to talk to anybody, we've got free online tools. Go to campaignforamillion.com or alpeshpatel.com. And if you do want to speak to somebody because you're the speaking type, also go to the same sites. It's entirely up to you how you choose to do it. Some people don't like to talk to people. Some people do. Both ways are perfectly fine. And our tools are some of the most sophisticated free investment tools for private investors anywhere in the world. In fact, I think they're the best collection of investment tools anywhere in the world. The goal is you take back control because of the problem of 5% growth. The diagnosis is fund managers are not going to do any better for you. The solution is you get the data, you learn how to do it, so you're in control. Bottom line is we share that knowledge. everybody wins. It's as simple as that. And in that spirit of sharing knowledge, if you share this video with other people or you comment on it, the algorithm on TikTok and YouTube will spread it to more people. The more that watch it, the more of these we will do. I hope you enjoyed that. I hope you liked it. I hope to see you in person. If you look at all the various tools, we've got free events coming up this year as well. We've got webinars, books, podcasts, vlogs, you name a way of communicating with people, infograms on Telegram, all free, and on Instagram, and videos on TikTok. You find a way of communicating, we're already doing it. From in person to books. That's our job. Thank you.